again, better flip the switch. Everybody scratching at the extra trade itch. Pour the Guinness, grind the tree. Always on live for all to see. Split the G and light the J. Come with rate, let them show you the way. DJ hours or buy the book. Nowhere to hide, come take a look. Rate trades, or bake trades, it all gets done while the man chills out under the Puerto Rican sun. Chat cooling out for one last trade. When the DJ hour sign flashes, it's on the way. Load up the Evo, contracts times 10. Look for that failure, trigger and do it again. Break out of the range and keep on with the trend. We're here doing DJ hours with all of our friends. Every day if we're green or red. Sometimes you just got a hood rap DJ and shit with your friends. Pour that Guinness or spark the J. We're gonna DJ with the sign on either way. Every day we got poured down. We're gonna yee an evil and go for the crown. Yo, pour that Guinness and spark the J. Time for DJing hours, the rake trays. Yo, just that time again. Yo, it's that time again, better flip the switch. Everybody scratching at the extra trade itch. Pour the Guinness, grind the tree. Always on live for all to see. Split the G and light the J. Come with rate, let them show you the way. DJ hours or buy the book. Nowhere to hide, come take a look. Rake trades, or bake trades, it all gets done while the man chills out under the Puerto Rican sun. Chat cooling out for one last trade. When the DJ hour sign flashes, it's on the way. Load up the Evo, contracts times 10. Look for that failure, trigger and do it again. Break out of the range and keep on with the trend. We're here doing DJ hours with all of our friends. Every day if we're green or red. Sometimes you just got a hood rap DJ and shit with your friends. Pour that Guinness or spark the J. We're gonna DJ with the sign on either way. Every day we got poured down. We're gonna yee an evil and go for the crown. Yo, pour that Guinness and spark the J. Time for DJing hours, the rake trays. Yo, just that time again. Yo, it's that time again, better flip the switch. Everybody scratching at the extra trade itch. Pour the Guinness, grind the tree. Always on live for all to see. Split the G and light the J. Come with rate, let them show you the way. DJ hours or buy the book. Nowhere to hide, come take a look. Rake trades, or bake trades, it all gets done while the man chills out under the Puerto Rican sun. Chat cooling out for one last trade. When the DJ hour sign flashes, it's on the way. Load up the Evo, contracts times 10. Look for that failure, trigger and do it again. Break out of the range and keep on with the trend. We're here doing DJ hours with all of our friends. Every day if we're green or red. Sometimes you just got a hood rap DJ and shit with your friends. Pour that Guinness or spark the J. We're gonna DJ with the sign on either way. Every day we got poured down. We're gonna yee an evil and go for the crown. Yo, pour that Guinness and spark the J. Time for DJing hours, the rake trays. Yo, just that time again. Yo, it's that time again, better flip the switch. Everybody scratching at the extra trade itch. Pour the Guinness, grind the tree. Always on live for all to see. Split the G and light the J. Come with rate, let them show you the way. DJ hours or buy the book. Nowhere to hide, come take a look. Break trades, to break trades, it all gets done while the man chills out under the Puerto Rican sun. Chat cooling out for one last trade. When the DJ now a sign flashes, it's on the way. Load up the Evo, contracts times 10. Look for that failure, trigger and do it again. Break out of the range and keep on with the trend. We're here doing DJ hours with all of our friends. Every day if we're green or red, sometimes you just got a hood rap DJ and shit with your friends. Pour that Guinness or spark the J. We're gonna DJ with the sign on either way. Every day we got more down. We're gonna yee and evil and go for the crown. Yo, pour that Guinness and spark the J. Time for DJing hours, the rake trays way. That time again. Yo, it's that time again. Better flip the switch. Everybody scratching at the extra trade itch. Pour the Guinness, grind the tree. Always on live for all to see. Split the G and light the J. Come with rate, let them show you the way.
What's up, everybody? How we doing, y'all? Woo! What a day. What's up, Vish? How we doing, bro? What a day, what a day, what a day. It's almost like you can see these things coming. How we doing? I am down to my runners here on MNQ. Obviously, we are catching a nice relief rally. I'd say we got some vol, don't you? What's up, Moro? What's up, Miggy? Randy? Aim Benj. Took the long from the bottom. Hey, you ready for your spot? Not a bad idea. I even said in the Discord a few minutes ago, I said I'm trailing my stops a lot tighter, and I think each new low we get, we're just opening the door for some whipsaw action ahead of the FOMC minutes being released. You know, it's just kind of a natural reflexive thing in this environment, right? Everything we know about this is the same thing that gave us this volatility to the downside can get retraced so quickly the other direction. And that's why you get these V-shaped recoveries out of nowhere, right? So when this stuff happens, you've just got to know what you're susceptible to. So it's less about what he says as far as today goes, Randy. The real FOMC reaction is always the next day. Today is just today. Today is a reaction to today's positioning. Nobody's repositioning for tomorrow and beyond based on what happens today. That will all show up tomorrow, right? So today is just all about this, like this known risk that's sitting out there and everybody positioning around that. So people are clearing out. They're getting out of the way. I think a lot of the selling was probably done under the hood as we kind of rallied back in a couple of these sessions recently. People love to sell into strength on the sly. So this kind of a move today was always there. It's been there each day. Today a little bit more than yesterday. We were very susceptible to this move today, and there's a couple things around that as well from the volatility front that made today really attractive. Ironically, the reason why I was super jazzed up about getting down towards that 73.80 area on ES was somebody today lumped in out of nowhere into a huge put position down there. And had we hit that before the London close, I think we would be like through the floor right now. Unfortunately, whoever was in that position must have been in it during the London period, and they closed that position. Ironically, that position no longer being on the map is going to hurt anybody thinking we get relief to the upside. The reason for that has to do with charm, and we can talk about that. But right now, the straddle, if you look on my screen, if we go back and we look at ES, just talking structure anyway, this is the pre-market structure. Ah, shit. Hold on. We'll do it this way. Here's our intraday structure, okay? So what we're looking at here now, I think you guys, if you've been here a while, you kind of already know the deal, right? If we're not under this, where can we go, right? There's a shape. You can kind of see a balance that's kind of saying, hey, why don't you guys go get stuck down in this area if you're going to retrace back into something. But obviously this positioning is so thin and is just a bunch of fuel. If we get a strong bid and VIX decides to drop instead of pop, right? You're going to get even more of a relief bid kind of up this ladder somewhere until you find some kind of a tenuous balance. But the thing you'll note on the screen, this kind of light blue dotted line is our current straddle. It is pricing in this whole range right now. So we still have a lot of room to go, and that straddle is going to stay high until kind of the event risk, the reason there's extra volatility today, goes away, right? The implied volatility for the day is remaining high because the thing we're all worried about is still out there. It hasn't happened yet, and until it does, things are going to remain elevated. There's still just as much of a chance that a position up here finishes in the money as one down here. And that's kind of why we have this potential to just whipsaw, 40 points at a time, wherever we want to go. So obviously, every time we sell, volatility is going to pick up. We're going to sell faster. If we have a bid, we've got a lot of selling we need to overcome to get that real vol crush, right? But the fact the straddle is high is telling you all of these things are currently active. But if we talk about the pre-market structure, you'll see why today was very attractive. But you can also, one thing I do want to show you is even though this positioning below spot is mostly green, right? Where is the strongest concentration of it going to be? Where does it get pretty much only heavy? Much lower. So if we got real volatility and we sold through this kind of strike and the straddle remains high, then you have the potential to actually follow this downward descending angle, right? To maybe go lower just to ultimately get some relief back higher. So all of these things are possible. And as long as we have FOMC lurking out there, it's easy to think we're just going to kind of hover down here closer to the lows. So the reason why I'm in this NQ short was I started a new account because I'm already more than okay. I'm holding on to runners on some fundeds that are from way up here. So, yeah, this is just playing around. And these are runners. So I was in 10, I took off 7, I'm down to 3, and now we see where we go. But you guys will have to tell me exactly what it is you're looking for as far as what you would like me to cover. And I did put a poll in the chat just because I need a gauge. I settled on 8 p.m. Central for me. 8 p.m. Central for me works because I have kids, right? My kids need to go to bed. We've got activities after the workday's over and the market's closed. I needed to find a time that allowed me to kind of balance my life and then also make a weekday session more available to more people. And it seems like the nighttime is there's just more availability to attend something like that. So I know there's time zones and things that make that difficult. So if you guys are going to attend that class tonight, I just want to make sure that 8 p.m. is a decent time. So I threw a poll in the chat. So if you're going to attend, I just want to make sure that we don't need to maybe pivot and adjust that time slightly. So this is just kind of my very loose approximation for can you attend and all that stuff. My long was based on the positive strikes below. Did you not take it because you were already short? Yeah, I wasn't going to take a long today on a reflexive bid because the overwhelming power on the day is knowing that we are in a vol expanding environment. Every time you get an additional sell, it's going to expand volatility. Obviously, we can get a relief rally that can, turn into a V-shaped recovery very quickly. But that's also why I'm in runners now and I'm not really looking to take trades because I'm expecting whipsaw action. So if you looked in the Discord and you look at my plan, you're going to see me literally say I'm trailing stops tighter here. Every new low we make has the potential to rip right back up on us because of this kind of environment we find ourselves in, and we're getting closer to the event, right? So people that maybe start covering their shorts because they don't want to get caught out, they want to secure their profits into the event. that's something you have to think about, right? And every one of those things is going to take some volatility off the board, which is why you get these kind of really rapid bounces, right? Just a second ago, we were up over 20 on VIX, and we quickly gave up almost a full point, right? So you just have to understand that dynamic. I'll explain the initial short here from the morning as well as in the overnights as well. Yeah, but 50 has been the straddle all day, guys, because of what I just said. It's pricing in the fact that FOMC is out there. It's a big volatility event. Everybody knows there's this hugely impactful thing in the market that can either rip us higher or send us through the floor, right? So because of that anticipation of that thing, it's pricing everything in on the board as saying, in this range, we've got a 50-point range either direction where things could finish in the money. That's what implied volatility is. How likely is it to go in the money? So because of that, and because that risk is still out there, because FOMC decision on rate cuts hasn't happened and there's not a speech that's over, that straddle is going to stay high. And what's also keeping it high is every time we drop, volatility pops a little bit more. So now the straddle started the day at 52 points. It's actually higher now than it was in the morning. So it's a reflection of how far we've moved and that the range of what could finish in the money just keeps getting bigger as we drop, right? Because if we retrace it all and you get these violent pops, right, it can really accelerate. You could go all the way back up here today. I know people don't think it's true, but like you could literally finish at the opening print or beyond today. That's how volatile this environment is. And it really wouldn't take that much to happen. So you just have to be aware of the environment you're trading when you're coming into it. If you didn't understand this potential today and you were looking to go long, there was a very specific set of circumstances you would have needed to have happen for that. And you also should have known coming in, if you have this data, where the ceiling was going to be on the day. It was pretty clear. You were not going to go very high today. If we look at the pre-market positioning and why the short was more attractive to me, is kind of on this idea of look at how thin this was. This positioning was thin, but where was it heaviest? Kind of at the overnight high. Everything beyond that was basically telling you, yeah, you guys aren't going very far today. So the more attractive thing from a risk perspective was always going to be the short. Everything about today said you should come down here. If you come under here, you should accelerate down and keep going, right? Obviously, after the London close, things shifted positionally. You do kind of have a little bit more of a floor. You had some people that were short in here that ended up covering their shorts, which meant that you have less room to drop potentially. And if volatility comes off, we know we can retrace through this whole gap, which is why I drew these arrows. If you're not under something, you're over it. And when the straddle is telling you, hey, all of this is just as likely to finish in the money, you kind of keep your head on a swivel. You know, whenever you make a new low, you're probably going to get a reactive bid of profit taking, right? Every time you go a little bit lower, somebody who jumped into short is trying to grab that profit as soon as they get it. So when you think about it that way too, it's like a short cover rally. Someone covers a short, you get some reflexive bidding in the market, up you go. Does it last or not? That's the other question. But even right here, we got this aggressive pop once we broke a new low. We're in a very reactive area. Any bidding at all can take you up through here because of that relationship to volatility, right? VIX hit 20.5, dropped to 19.7, all in a couple of candles. 2-minute candles, rather, right? It didn't take very much. It was like a 5 to 10 minute swing where we popped 30 points. There's a relationship to it. Once you understand that relationship, all of this makes sense. Luke, the group session is on the WAP page. It's in the mentorship page. So I'll throw a link to that. It's a link in my bio on Instagram. But if you want the actual location and you want to sign up, this is where it is. There's the WAP link. I'll just pin it so you guys can see it. All right, we'll explain the initial short here in a minute. Can you talk about the price action in Asia yesterday? I was in a short based on the levels at New York close, worked well but didn't hit my target, instead ripped high into that ceiling. So QD, what happened in the Asia session last night was actually just kind of some fuckery around some of the Korean market, right? They had earnings on SK Hynix, and everybody in Korea has been getting margin called. They had poor earnings. It whipsawed, right? You had these people. It's kind of like a dead cat bounce, basically. So we ripped through this whole negative range. So if you looked at the pre-market positioning, you kind of saw the shape from like 74.65 up towards where we topped out. The reason I took the short on Asia up here last night all the way down was for that exact reason that I took it today. Everything about today said that range was just ripe for shorting. So that was just kind of a goofy one. There's a little bit of whipsaw because of the Korean and Asian markets, but I wouldn't read too much into that. The weakness was always there on the day. Opening under this kind of key strike here, and especially this one here at 74.65, any failures under this, the shape was always going to point us down. And that's kind of what we talked about in our pre-market plan today. Everybody that paid attention to the pre-market plan was ready for the convexity of downside today. Today was about as easy of a short as you could possibly get. Because most of this move is shorts that market makers have to obtain to keep all puts hedged. Yeah, so when you look at, and this is not just the positions today, this is just the overall positioning of the market. We are in a very negative gamma regime. So what that means is there's just a lot of negative positioning overall. And when the gamma is negative, it is highly reactive to price dropping and volatility moving higher. When that happens, market makers have to reinforce that momentum, and they sell with that momentum. So knowing that, that's what makes it risky. If volatility pops and you get some selling pressure, it actually accelerates it. It keeps it going. It extends the range. The opposite side of that is also true about why it's dangerous to try to short too much lower, right? If you don't know where things are generally supposed to start slowing down, you try shorting the whole, all of a sudden a little market bid comes in and we rip face. That's why. That same environment that makes selling attractive is the exact same thing about why we get huge V-shaped rallies, right? If VIX can't hold on to 20 here, and it gives anything back at all, there is going to be a natural, reflexive, mechanical bid because of that. The change in volatility has a reaction the other way, the same way that selling expands the downside volatility and induces this kind of feedback loop of selling from market makers. So it's a two-way street, right? We're just looking for the ranges between where do we know they're going to slow price down versus these ranges where it can accelerate. And normally you don't have ranges of hundreds of points where it can accelerate. But when you have a volatile environment and VIX is elevated, and you know that there's a bunch of positions from market makers telling you, hey, all of this red just means if we sell faster, we sell further. Knowing where those areas are is a huge edge. Think of anybody you knew today that went long and got their ass handed to them. You were over here on the sidelines going, no, don't do it, right? You were sitting there going, the best R to R is down, and here's where, from here to here. That's where the edge of this is. You know what is more probable, and you know the specific places where that probability should start showing itself. Let's see. Where will the class be tonight on YouTube? No, Mr. Papa Giorgio. I love that name, by the way. I love Vegas Vacation. I'm of a certain age. That movie still cracks me up. Anyway, it is going to be at that WAP link. The pinned message, that link is where the WAP page is, and you can sign up for the weekday class. We'll also do a weekend class on Saturday at about 11 a.m. Central. So if that time works better for you, then go ahead and sign up for that one. Do you refer to the gradient chart in VS3D being in a negative environment? Yes. Any platform that you use should have some kind of a gamma graph that shows you. And I'll actually show you guys kind of something really interesting about what I started putting into my daily plans that shows you the difference between like what I use versus like a naive gamma tool. And the funny thing is, I have a script I'm going to share with people where if you take a screenshot of your broker's option chain And again, guys, these are just runners. I am literally down to runners on MNQ here. I still am in a funded account short from the top rope from today that I'm trying to let run and just not look at. So I can like just, if we get further selling, I bank. If not, my stop gets hit and I'm fine with it. But I am kind of actively watching this MNQ position, so I might be flitting back and forth, but bear with me. But I do trade off the ES SPX structure, but MNQ, it was just cheaper and, or not cheaper, but it was just easier to take the same trade and get more points potentially. Yeah. One of my horses, he races. Hey, that's sick, dude. That's really funny. Actually, when I lived in LA, my buddies and I used to go to the Santa Ana horse track because they had like, I think it was like 50-cent beers or dollar beers or something like on tap. So you could just go there and spend like a whole afternoon just like getting hammered on the cheap and just betting on horses. And I didn't know anything about horse racing, but it just made the idea of like yelling at a horse when you're like how many beers deep that only cost you $10, you know, for the whole day. I miss those times, but that's when I was single and in my 20s and the world was my oyster. That's such a great name. That's so funny, dude. Nick Papagiorgio. If you guys don't know what we're talking about and you haven't seen Vegas Vacation, I don't know. It's like such an underrated nothing movie, but like there's so many things that just make that funny to me. I say where's the damn bait all the time and like nobody knows what I'm referencing ever. Oh, stop mid-sentence about naive gex. Sorry, I got distracted. So basically naive gex between today and most days is way off. Like if we looked at yesterday, the naive gex map of what the day looked like coming in versus what it actually ended up being from a positioning standpoint, right? I'm probably going to get stopped on this MNQ. Sorry. Got one thing I got to look at here. Can't ignore the real job all the time. But basically what it shows is there was a huge disparity between like everything from here down is negative gamma. Everything from here and above is positive gamma. That's the naive approach, right? Making this assumption about a relative to spot price, like where is a call wall and a put wall. But when you look at the actual dealer positioning, it's kind of like it will blow your mind, right? Like just how different those two things can be. So what I started doing was actually leveraging that information and saying, hey, one second, let me see if I can actually pull it up and I'll show you guys. What you can do in the script, sorry Lou, I will get to this point eventually, that we can talk about is that you can actually just take a screenshot of your option chain from your broker, and I'll be sharing this on the group class at the end of the day and with everybody that's taken one recently, how to do that. And all you'll need to do is just take the screenshot, tell Claude to find this, and then you can paste those values into the indicator, and you can have just even the naive gex as something at least to trade off of if you can't afford a platform like VS3D, for example. So what I'll show you guys really quickly here is, yeah, we'll do this. Here is, can you guys see that? Yeah. We'll do this here. So what you see on the right is kind of the positions that I use, right? Market makers are long, they're short, they're long, they're short. On the left is what the overall kind of naive gex breakdown would be, is that everything from here is positive and everything from here is negative, and there's a call wall and there's a put wall and there's a gamma flip where everything below this spot is positive or negative and vice versa. So if you don't have the granularity, there are days like today where it was just so obvious you can very much trade off of this information, right, with a naive gex approach. But you have to be able to modify your approach to actually make it something useful. Because if you don't, you can get your butt handed to you, right? Because you don't know where those areas are in between that are fundamentally different, right? They're going to just show a big bar. And because there's a lot of positions there, they're making the assumption that everybody there is long. But if you don't know that the behavior is actually not magnetic, but might actually be like a rejection point, or it might be a dealer short where they think it's going to be supportive underneath, and we get there and we fall through the floor, somebody using a naive model has to understand they're operating on incomplete information. So that is kind of the thing that I wanted to touch on was there is a key difference between these two platforms, but sometimes, right, they do align. So if they align, what is that alignment? Like, where is it beneficial? Where is it not? Right. And that's kind of the thing I just wanted to touch on there. So I will share a script with people for how they can actually use that. And it's free, right? You don't have to pay for a data provider to get that naive GEX on your chart. So, yeehaw. But we are seeing this here. You can see on Bookmap, there's some liquidity showing up above. That's maybe getting activated a little bit. But all in all, all right, sorry guys. Yeah, so there are multiple ways to trade this. You don't have to pay for the highest cost platform. There are plenty of ways to leverage the naive GEX. That's what most like an unusual whales, right? When they talk about option flow and gamma, they're making a very naive assumption about who holds what and how. And to my knowledge, I don't know that there's actually a dealer customer tagged approach to that, because they're using like Oprah data, I believe, as opposed to SIBO. I can't speak too much on that from an individual name standpoint because I just don't care. But the naive approach is, if you have options chain information that you have access to in your broker, you can literally replicate that call wall, put wall, zero flip, high vol level from a naive approach by having access to a Claude or a Chat GPT. You just drop it a screenshot, you throw it on your trading view, and you'll at least have some key levels that way. So yeah, but I just wanted to share that is something I've started incorporating into my pre-market plan. So that way you can, if you follow along in the Discord there, you'll at least know like, hey, from my tool or from this approach, where does it line up with Mitch's plan, and like, what should I be aware of or considerate of, and all those things. So yeah. All right. So how long is a group class? It's 1 hour, maybe an hour and 15 minutes. Try to leave a little time for a Q&A. And then just a reminder that like basically the whole approach there is to give you guys more of a primer than what we can cover in detail today. Most of what we're going to cover on stream today is like, maybe we see an opportunity for a new trade or a great trade. Let's break down why today's move happened the way it did. What does the afternoon look like? Like, you know, I think if you guys paid attention, you saw yesterday on stream, I said the best risk to reward for yesterday's price action into the afternoon, if we talked about it, was what, and then what happened, right? There was this great opportunity for shorts. The one I took on stream, I added into and turned a 2 micro trade into a 10 micro trade into a, you know, almost $1,800 win. So what we cover on the stream is valuable, but what we cover in this class is more specific to the real information of like, what is gamma as a concept, like not as a concept, what is gamma? Why is it important? How does it inform how we read these price bars, right? How does it inform why I draw the arrows where I do, and why we go to the places the arrows point us to, and things of that nature? So knowing that, right, is what the majority of this class is going to be spent around, and then tying it into these positions, and then tying it into like other services you can use. But what you'll get out of it at the end is essentially like a cheat sheet that you can look at every day. So whether you're looking at naive GEX or you're looking at the actual positioning like I do with VS3D or another platform, you're able to start doing this on your own. And then also a document that helps you gauge, are you getting it? Am I actually seeing what Mitch is seeing in the same way? Am I picking it up? What does my current system say happens at this place? What am I expecting to happen there? if I'm looking at gamma, whether it's naive or not, is this expectation the same, or do I need to kind of think about this a little bit differently? And then monitor how it behaved. And then you come back at the end of the day and say like, wow, this would have given me more confluence to the trade I was thinking about taking, or wow, that would have kept me out of a really bad trade, honestly. And you can look at that, and over the course of 10 trading days, whatever, you can reevaluate and be like, do I want to leverage this in my trading or not? So that's another benefit. I'm getting it in a sense. I'm just kind of lost in what made the short obvious, probably overthinking it. Was it ceiling dealer short above with thin positioning below? Yeah, a little bit. If we, again, what's obvious to me might not be obvious to you if you're new to this, and that's fine. When we talk about negative positioning is volatility expanding, right? And the lack of positioning is kind of like negative positioning. If market makers slow price down and slow volatility from realizing when they're long, and we don't see a whole bunch of long positioning until we go higher, what makes the downside more attractive when it's generally very thin? If the lack of something is on display, that's informative, right? If there is a lack of proven support, mechanical support, where I know if we go there, somebody's going to be waiting there buying. If there's a lack of that on the board, doesn't that kind of infer potential to drop and drop quickly? Especially if you know there's also positioning that's negative beyond just today, that's also going to reinforce selling. That's what made it obvious. Could we have gotten the pop? Yeah, but the strike we had to get over was up here. And if we're not getting over this one, we're definitely not getting over that one. So as long as we're under this, you short any pops into it and you take profit here. You think, okay, what changes that narrative? If we keep getting volatility, how much lower can we go? Obviously, we talk all the time about looking at the London close. What happens at 10:30? What does the positioning look like after 10:30? Well, it looks like this. How low can we go? Probably down to about here before we get some reactions. We pretty much got there. Then we got a little relief, which is also the case, right? If we're not under this, we're over it. Where is kind of a natural balance of the afternoon shape kind of pointing us back into the middle? But if we get some volatility, where are we going to go? Right back down. It's just that simple. Maybe that doesn't sound simple, Bortusk, and I get it, it's new, but you have to start thinking about these things in, if there's a lack of something, that means that's a range I can trade into. Trade until you see something that is going to slow you down or stop you, right? So seeing where those ranges are and knowing that when we come in on the day, the market's pricing in a 50-point range, right? That's telling you there's a lot of opportunity on the map for me today. So what is the biggest asymmetry of risk? If I risk the least, where can I get the most reward? That range was very obvious to the downside today. Where was my take profit? I was up a lot. I mean, those were just runners. I was in 7 contracts. So my TP was just leaving this open to see like how much lower do we go. I really don't care about these runners. And like I said, my original entry today is actually like up beyond here. So I'm sitting pretty good. But getting stopped here is not a surprise. It's starting to click. I'm understanding, just trying to understand how to exploit it. Yeah, I mean, guys, anybody who's been here, if you've been watching these streams for a while, I'm sure it's frustrating to be like, God, I keep watching this and I'm not quite getting it yet. It's about tying it all together, right? You take one piece and you just gain an understanding of that piece. If I just know I should look to see where are market makers long, where are the green bars, where are they short? I can move where they're short a little easier and faster if the market's going that way. But if it doesn't go that way, where is my opportunity to the other spot where market makers are long? If we tend to find balance between where market makers are slowing the move or expanding it, right? Yesterday was a great example. Why did we kind of pin down? Go watch my trade review on Instagram. Could not make it more simple. Really try to just step you guys through the rationale. Why did we short yesterday afternoon? It was harder for us to go higher. if it's harder for you to go higher and there's less room to capture going higher, but if we get any selling pressure, we're going down to this general area, and there's some convexity that says if we go slightly lower, we can really sell. And I know I've only got so much time for that to happen. That made it really easy for every pop to keep shorting because it was less likely to go higher already. And the closer we were to the end of the day, it was even less likely we would go high. So shorting was obvious. Today, we are still very risk on. Like, we could easily retrace this whole move and go to a new high of day up here, right? Because volatility gets crushed. But all it takes is one big sell and volatility to spike, and who knows where we're going lower, right? It's about understanding those places and knowing where the places are to best put your risk on, right? So if you can be patient and you can observe and then deploy your risk, and you're playing the probability and saying, if this happens, then this should happen. The second the should happen part doesn't, your trade's invalidated, right? Then you start thinking about unless. If the unless part is on display, now I know I need to look for this other thing. What is that probability? What trade can I take off of that? But today was, entirely predictable. There's a couple people in the chat here right now that have been working with me or attended the group classes just a couple days ago. And the fact that, I'm going to shout him out, Leto here messaged me pre-market and literally caught 100+ point trade on MNQ that obviously he now wishes he would have held longer. Did it on his own. Did not see me, did not message me first, did not look at my pre-market plan yet. Took that in the pre-market entirely on his own accord just from this and got a quick 100-point winner. Somebody else whose size is bigger could have made who knows how much money on that. So shout out to Leto for that one. I think Miggy had another awesome trade that she actually averaged into this morning. Is that right, Miggy? I forget exactly what that was. But you absolutely crushed that now. Yeah, Miggy caught on ES 74.75. Added in at 74.65. Nice winner on the day. Passing evals, doing all sorts of stuff. Let me get an arrow out here. Yeah. But here we go. Look at this structure. So if we're looking at this right now and we're seeing well, why didn't we go lower? We're kind of started getting to this overall positive spot, right? So if volatility doesn't persist and you get a little lack of it, you have a mechanical bid. Why do V-shaped rallies happen? Why do we get these really aggressive bounces even though we sold off all day long? It's a mechanical response. If you don't have volatility expanding and it drops and you're in an area that expands volatility, you have a lot of room to accelerate back the other direction, because if market makers are short all of this range, if strong bidding steps up, they buy too. The same thing that sold us lower is the same thing that gives you a lift higher. Do I do anything differently since it's FOMC day? I don't, Macy. I mean, the thing that I do is I carry it with me in my brain, what an FOMC day represents. So let's put it this way. How many of those pre-market data print days come and we get the huge spike as soon as the data comes off, right? You get this big pop or a big drop and it's a spike. And then that's it. We don't continue. We just come right back, right? It's because whatever the volatility was around that event, whatever the worry was, whatever people were pricing and taking bets on for their trades was based on the idea that there was this heightened potential for more range depending on how that event transpires. And the second the event's gone, all the volatility's gone too, right? It's no longer an unknown. Now it's a known. So when something goes from unknown to known, the probability distribution changes on what's going to be in the money and what's not. So you get a crush immediately of that volatility. And the straddle goes from this to this. Well, guess what? FOMC, it's still not done. And guess what? The straddle is still pricing in a move way up here to 74.65 and back down here to 73.60. It is still anticipating that big range. So until that event is done, We are literally potentially going to go up there or more, or down here or more. So when FOMC is there, you just have your targets, you trade to your probabilities, and you get out of the way. So even for me, like I said in the Discord right before the stream, I said, hey, in this last short, I'm trailing my runners. I don't really want to get caught. Every new low has the potential to do this. I mean, why not just show you? People never believe me, but I mean what I say. First things first. Maybe it's better to do this a little differently. Hopefully you guys can see that. I don't know if you can, but this was my pre-market plan. Literally said it this morning before the market opened about the event risk being priced in. There's my trade that I took initially on ES. Move my TP in case we get the bigger flush. Gonna trail my stop. If we start sniffing 73.50 on SPX, it would be glorious. Guess what that was? 73.80 ES. And we were calling that out at 9 a.m., which was way back here. And then we dropped all the way down to 73.80. So, I don't know. It kind of feels like tooting my own horn, but this is just using data and taking the obvious trades. So, yeah, but as far as other things in the Discord, it just about trade management, right? This was before the stream started, and this is what I meant about this kind of behavior and why I was happy to take my trims where I did, right? Reach my target, runners trailed tighter from here, not a spot to get greedy, right? Expecting whipsaw on each move lower if we continue to get them ahead of the event. And then look what happened. Right at 11:30, big pop, little pullback, another big rip here because volatility is dropping. We can move up through this range. There's less impetus to keep going lower if we know where there's positioning below us that stops us from doing it. So, yeah, I mean, it's just, look, we drew the arrows and what came? If then, if we hold down here, then we get some relief. We're probably going to drift back up into the middle. Not going to rip all the way up here unless we get some further vol crush and some bidding. But the crazy thing is we could literally traverse the entire range of both sides of this straddle when FOMC hits. And then what's going to happen is if we know that there's only so much time before the day ends, right? We run our race. We are trying to get up the mountain before the sun sets, and the sun sets at this time. Where can we go? If the straddle says you can go all the way up here or all the way down here, the closer and closer and closer we get to this finish line, that straddle should be coming down. Every day, the straddle does not remain elevated this long. It does not price in this big range all day long like this, right? So the second FOMC hits, you either get more volatility because people start slamming the sells again because it's bad news or whatever. We have a range where we can drop and then keep going. But then the factor of that straddle coming off means, you know, we need to persist to go much lower. That's why this arrow is there saying like we could go lower, but we're probably not going to go much lower than here unless it really keeps selling because that straddle is just going to start coming down unless the volatility can really keep up, right? And then the flip side of that is we can go all the way up here, and depending on the positioning, we could really ramp up here into the end of the day. We could finish at a new high of the day. And somebody would be like, how the hell does that happen on a day when we sold down so aggressively? This is how. The environment matters. If it's a negative gamma environment, it giveth and it taketh away. It gives you the big sell, it gives you the V-shaped recovery. It takes it away from the sellers, right? It is a two-way transaction. Market makers don't care. They don't have a preference. They just have an obligation. They are managing the positions they hold, and they are buying and selling futures accordingly. So again, where do you see V-shaped rallies? In negative gamma environments. This would never ever happen if we were in a positive gamma environment. Why didn't I take a low risk long then? Josh asks. Because I caught shorts all night long and then all day today. I don't need to take the counter trend trade, especially when all it takes is one wick and you are literally right back down to the low. My risk is managed and defined. So like, I'm out of my runners now. I could give two shits about where this goes, personally speaking. The closer you trade to FOMC, the more stupid you are. Let's just put it that way. So I'm not going to trade into something that all it would take is one strong sell and this whole thing goes to shit again, right? If I'm taking along from down here, great. But like on a day where I traded so much across every account I have, I literally do not want to put another trade on if I don't have to. The highest probability setups for me were shorts all day long. Yes, you could have taken the counter trend along with there with some confidence, to your point, right? But if I've been trading short all day, and I'm down to runners, what is the point of me putting on a long? But I know we've talked about this a lot on stream before, right? Like, if you trade ES, don't you ever take the counter trade? And that's where, like, if I'm trading ES primarily and holding my shorts there, that's where I'll take the NQ or MNQ counter trade. Like, there's been so many streams where we get to this point on a not so volatile day and it's a natural bottom, just like yesterday, kind of a natural top. And you just say, okay, we're less likely to go lower from here. If we do, it'll be kind of a slow grind. We might get a little pop and then fade back down and just go sideways. Those are the day where, yes, the lowest risk, highest reward trade is the counter long because you've pretty much reached the floor. It's harder to go lower, so then you take the counter trade. But on a day like today where there's still so much volatility, like I didn't personally want to take another trade. But yes, to Vish's point, who did take that counter trend long, he picked the absolute best risk to reward spot on the day to go long. There has been no spot that was as safe to take along as the one he took. So kudos to Vish for spotting that on his own. Trading after FOMC, I'm not. And the reason for that, I'll just be completely honest, is I am sitting in so many different SPX and XSP hedges for this kind of negative regime that we're in and potential rate hike or hawkish hold that I don't want to take any more futures trades and give any profit back across all my accounts when I already have options trades on that will benefit for more downside. So hopefully that answers that question. But I think this is, this is playing out kind of how you would expect. We talked about the relationship between volatility, right, and these negative positions. You either get VIX continuing to break higher as kind of a volatility representation, right? But what goes up through negative gamma comes right back down through it. So you just have to be aware of the environment. You don't have a strong support, strong in today's world, unless you are down here, right? So if you want to long something, this is where you're longing it, but you are trailing that stop tight like a mofo because all it takes is one decent sell and this volatility goes right back through the roof and you go right back to the floor. You just have to know the environment you're trading, right? What is it conducive to? Normally, if you're going long, you're happier to hold that long because you're like, if I get a pullback, I know it should kind of stop right about here because we've moved through a spot where market makers are going to slow that down. When you are sitting in a 55-point straddle, that little tiny green right there doesn't mean jack shit. Truly does not mean a thing. It will cut through that like frickin' butter. So now the problem is, do you actually think this is the floor? And if we get strong selling and we get to that again, and we get to this strike just below it, where does that accelerate you down to? How much farther can you go, right? And that's what you have to think about. But right now, anyway, we are getting that relief. We're getting some vol crush. We're getting some people bidding up the market. So we're just going to kind of keep doing this move until somebody else shows up. And that's what you're waiting for. What happens when the volatility shows up again? Which way is it going to go? And I'm not going to lie, I've actually been playing around with some different things. I've got kind of an indicator that's really interesting. That is kind of an approximation tracking intraday kind of volatility, realized or not. So what I think is interesting is every time we got a pop higher, it was calling for absorption, basically saying this move is going to fail. And then every time that absorption let up, what did we do? We sold, meaning the realized vol for the up move was getting absorbed. The volatility expansion is the in-betweens, right? So every time we got a pop higher and that got absorbed, we dropped harder. But from here, now this is telling you this is very hollow. This is very thin, fragile move up. This is not actually full of any convincing bidding. This is the lack of something, which to me says exactly what we just talked about. This is risky. You are moving through a range that is encountering no real resistance. It's purely mechanical. It is on the back of a reflexive bid. It is just lifting the market because there's not a lot of volatility right now. But the second some volatility comes back in, we know what's going to happen and where it is likely to go to. Which bookmap link do you use? I have bookmap OTL. I don't know what that is, Dave. All I know is I have bookmap and I use the bookmap data feed. I'm not a big bookmap guy. I'm not gonna lie to you. I'm not gonna say that like, oh, I love it or anything. It's just there. Rumo, you are nothing if not consistent. CJ, yeah, the class is tonight. So it's at 8 p.m. Central. It'll be an hour, shortly more. Yeah. And if you want access to that, it's the pinned link in the chat. Well, it should be pinned anyway. I don't know if you see it. It should take you there, unless I'm wrong. It's called It's All Greek to Me, and there should be a weekday class option. What's funny is I'm pretty sure the last couple times Rumo signaled a trade, he got his ass handed to him, at least on my stream. So the pinned message? No? Damn, I guess I don't know. I thought I pinned it to the chat. You bring what you want, but I'll share the recording after the class, and then there's a couple documents that I share as well. So I will say Rumo is not wrong, because if there is a pullback, it has the, again, potential to cut back through this entire rally very, very quickly. So, yep. And again, regardless of what you guys do, if you do attend the course, again, this is just going to go more in depth about what we talk about on stream here. Obviously, we'll be on stream for free every day, so the benefit is you kind of have more information. So if you come back and watch this free stream every day, you're going to be able to kind of ingest that much more knowledge to being able to use this system and this data in particular. Glad I found this channel. I like the approach you share in managing the risk. Yeah, the market very much can turn wild. Can we have a breakdown of my initial short? The initial short from this morning? Yeah. I'm just a little... I'm not going to lie. I kind of would like to throw another, like just even a single micro on NQ or something just to see what we get. And just risk like 100 points or something. It'll probably wick that right when the minutes come out, but I'm going to do it anyway, just because the convexity is there. Anyway, if we look at the pre-market, we get rid of all of our drawings. What I wanted to show you was, it looks silly now because the positions were so small. It was basically that if you're not over this strike and you're under this one, this is so thin and the overall gamma backdrop was negative that it was basically kind of this idea, like if you're shorting from here, because I was in from the pre-market, if we got down to kind of the 73.50 area, which is the start of the strongest overall intraday positioning, that is a huge like 10R trade. That was it. So that's kind of the gist of that one. There's not a whole lot more to it. It was just the idea that if we sold under here, we should pick up some volatility and just keep selling. And you can see every time we rejected this strike right here under 74.60, then we got the acceleration into this range. We kind of paused here, then we got the next acceleration down. We kind of chopped and consolidated, and then we got our move. But once we hit kind of this natural floor and we started looking at the intraday positioning, we could see that even further, right? Anything that did not hold here would likely get some relief. Now the whole story is going to be about what happens now. Do we retrace this whole range up here, or do we get the acceleration back down to the floor? But the pre-market trade could not have been more simple based on the information we had at the time. And that's about all that comes down to. What's up, Eldred? What's up, man? So the recording will be available after for those of us in a different time zone and can't watch it live. 100%. If you sign up and you can't make it live, I will send you the recording and the same materials as if you were. Hey, what's up, Toasted? Doing well, brother. Huge day. Huge day. For tonight's class, are you going over what you did on Saturday and Sunday? Yeah, it's going to be essentially just hammering those same things home. And then what I think we'll do if we do future group classes, I'll throw another option out there that's kind of like a part 2, and we'll just kind of expand, but this is going to be covering the same things. So if you found it unfamiliar, from the first go around from the weekend bore, you're more than welcome to attend, but, just to kind of hear more of that stuff. But, I think if we do future group classes, now that we've done a couple of these, we'll have to like find a way to say this is like class 2, covering a few more areas of interest beyond what this initial one does. Go on degen right before FOMC. Yeah. I mean, I'm up in so much profit on that account that literally three micros on MNQ for 100 points is not even going to be a paper cut. 8 p.m. Central is 3 a.m. in your country. Damn cool. Yeah, man. I mean, that's the hard part, is trying to find that time. That's why I kind of threw it in there. It's like, is that a decent time? But I have to also understand, like, I have my life, right? So like I have kids, I have bedtime, I got all these things I'm doing. So 8 p.m. Central is just a good time for me to have a full hour and change to like not be worried about, am I giving myself enough time to cover this and whatever, and trying to be accommodative of people's schedules. And if you're not able to make it, then I just send you the recording. And if you have follow-up questions, you can always, ping me. So Tradeify accidentally created an eval instead of a funder for me, then denied me the money I made on the account, even though they admit fault. I think you're the same person that's in the Ray Trades Discord talking about that. My answer is the same. It's their thing. So they get to decide what happens for you. Unless you're going to like take them to court for that situation, you're just going to have to take whatever the outcome is for how they want to rectify it. And you obviously passed the eval before. You can do it again, but just take the discount they give you and treat it like a round 2 to prove to yourself that you're good enough to do it a second time. But I'm sorry that happened. It's obviously not ideal, but it is what it is. And I can't do anything about it. So I can't really give you any guidance there. The difference of ES and SPX is like 33 points, I think was the fair value. It's probably oscillating a little bit today, but that's just what happens. What do you think of post FOMC? Is this a fake pump? What is Orderflow saying? Today is today. The real FOMC reaction is tomorrow and beyond. Today is just about short-term speculation today. It has nothing to do with FOMC. The real FOMC reaction is all about tomorrow. I think the market's already telling you it is in an extremely perilous state. There is not a lot of a floor beneath us right now. And if we get something, it's going to have to come out of left field and be super dovish to cause a lot of volatility crush to get us going the other way. But I think we've got a lot further to go over the next couple weeks. So I am hedged to the tits, as they say. I am in SPX put spreads, XSP put spreads, a couple butterflies between here into August. I've even got a couple for September. And I am just allows me to trade freely during the day because then I don't care. I'm hedged. It was cheap. If I get the asymmetric payoff, great. But I day trade. I don't care too much about the future. What do I think? Prediction today. I think it's either a hawkish hold or a hike. And I think either of those two things could happen. Warsh is not about forward guidance, so what he chooses to do is going to be kind of setting the tone for how markets are going to have to react moving forward. And I think it's super interesting and also just very risky because of the environment. In the group class, you get into trading SPX with spreads. We can talk about that a little bit. I think that is, to me, would be kind of the next level of the course as well. And I think, yeah, one-on-one is probably a better spot for that, to go over like your particular trading style and where spreads and flies and those option strategies might help you better. That's just my personal opinion. Because then we tailor it to you. And just so you guys know, I'm not here to sell that. Like, we're here to just do this for free. But for the people that really want the hands-on to really get into the nitty-gritty of how to trade this every day and catch the kind of moves we're catching, that's what the mentorship is for, so I can give you that one-on-one guidance and tailor it to you specifically. I have the recording, which clicked more on the rewatch doing my own study, and it's starting to click this way. Awesome, Bortusk. That's the point of the group class. The point of those materials we shared after was to empower you to take this where you want. You know what I mean? So, did I miss something? What did Vish do? I probably missed some messages here, guys. Sorry, I've been a little delayed on that. But if, yeah, Vish, I know he only caught those 20 points, but great. All right, let's check in on our little MNQ short here. How we doing? Hey, almost a 100-point banger. What's up, Urge? Thanks for joining, man. And look at that, market reversing. This man don't miss. Just playing the probabilities, you know? We're doing what we do every day, every single day. We are here doing it live. Do it live. All right, guys, I am going to hop off. It is now Lomeli time. So make sure you guys stick around for Lomeli. I'm sure a bunch of you just tuned in for him anyway. So yeah, appreciate you guys being here again. I will just share that link one more time if you want to register for the group class. I'll get those wait lists approved, and then we'll get the Zoom invites out. So pay attention to that later. And again, if you guys are going to miss and you just want the recording, make sure you let me know in the WAP, and we'll go from there. Otherwise, if you guys want to join us in the Discord and see these pre-market plans every day, please do so. Please join us. It's really fun for me to share that with you guys. And started again doing more on the AI stuff to kind of get a text document that you guys can see, and then we do an end-of-day recap to kind of show you here's what the forecast was on a probability basis for the range, how we traded it, blah, 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 and go from there. But if I don't talk to you guys, be safe, don't do anything dumb, be prepared for wackiness. It's a crazy trading environment. It can literally explode either direction, and maybe it does before it ultimately settles for the afternoon. So just be very, very careful. But stay tuned for Christian. I'll get out of his hair. I'll see you guys later. And if I see you at class, I see you at class. Thank you so much for joining me here. Project 365. My name is Mitch, Bad Gamma Jamma, and we will see you all another time. All right, bye-bye.
What's up, chat? What's up, chat? All right, we're all set here. What's up, chat? All right, we're all set here. Man, FOMC today, chat. Let's see what we get from the announcement here today, chat. I'm gonna let me pop out chat here. Lomeli, that ES ended up working out yesterday, bro. Exactly to what we were talking about, right? Exactly to the tick. But wait, oh wait, it did end up working on ES for you, right? Tuesday at 10. Yeah, I hit TP at the low. Trying to see where we were yesterday, Tuesday. Once NQ hit the 770 level. Yeah, it ended up working out on ES, but on NQ, trying to see where I entered yesterday. I don't remember. Don't remember here. Regardless, yeah, I saw the move downwards and I was like, man, it is what it is. But going into today, chat, FOMC. Lomelito, my guy Logan, what's up? Leo, what's up, Leo? What's up, chat? Let's see. I'm liking the speed we're getting away from price here currently. Away from the low, right? The 4 hour. I'm not gonna take anything until FOMC comes out, right? But currently what I'm seeing is I haven't really done any game plan, right? But what I'm seeing here is we took out the low, right? The 4 hours closing up above the swing low here. Let me see. Let me pop up on NQ. Closing up above it, right? So on the 1 hour, it seems like we're gonna invert this bearish gap. We have premium of the range being the 826 level. A premium PD array, right? So swing high to low. Premium PD array would be that swing high on. It was also it'd be that bearish gap. It's also bearish gap on the 15-minute. On the 5-minute, it's a swing high at OTE. So we just traded up into premium this leg, right? Premium. We're pulling back. Where do we pull back? Into a 15-minute gap. And let's see what else. 15-minute gap. Yeah, the 1 minute's been pretty displacive here through lunchtime, essentially, right? From 9:15 up until now. So the last hour we've been pretty displacive. Let's see what FOMC brings. I'll probably look to not. We're gonna get a reaction, right? We're gonna get a reaction at 11:30. So I'm kind of holding off until that. I don't want to be in a position until after the announcement. See if there's anything that sets up here. Full port FOMC 10 minis. Logan, do it for us. I will go long somewhere. Someone else go short, and we will split profits. Man, the delusion that would work. Or even better, MES Polar Bear, go long on one account and short on the other. And you'll make money on one account. If anyone's going to do it, it's Logan. You got stopped out for both? How's that possible, Elder? Half the chat longs, other half shorts. Let's see, start a queue and start a poll. FOMC result. Spike higher. Spike lower. Add option. Goes nowhere. What do we think FOMC brings us, chat? Do we spike higher? Spike lower, goes nowhere. What I would, wait, actually, I'm not gonna say what I want. Let's see what chat thinks. Yeah, it should be interesting. If this 4 hour close, how it's looking, I do see higher prices. But again, FOMC is no one can really. Goes back to low of day. We'll test near open spike and come down lower. End of speech goes higher. Spikes in both directions, right, Chris? With this action, spike higher, spike lower, then ends up being around the same price as the 11 a.m. candle open. The initial FOMC stuff is hogwash. So it seems like majority of people think that we spike lower. Oh shit, I forgot to turn on this light here. Chat, is it better with the light or without it? Better with or without? Initial FOMC, these kind of days annoy me because I wish we just had a regular day type day to trade. Yeah, I know Jake loves it. Jake loves FOMC. He's probably, in fact, trading it. But personally, I think it's very chaotic. So I'd rather either. This is the thing for FOMC weeks historically, Monday through Wednesday are on the more rangy side, right? Especially Monday, and Thursday, Friday tend to get the overall continuation move after FOMC, right? It's not like that every week, right? Because if you look at today was pretty clean. But if you look at the last 100 FOMC sessions, right, which again I haven't, but I've traded or I've showed up to a handful of them, and for the most part, we get cleaner direction on Thursday and Friday heading out of the FOMC announcement, right? So we'll see what the FOMC gives us, and then afterwards, being tomorrow and Friday. Chat, people really, that new guy, what's his name? What's the new guy's name that's giving these announcements now? Yeah, today I will only be doing evals. I don't want to get stuck in anything. Warsh. Kevin Warsh. I didn't know there was I didn't know you could bet on what his first words were going to be. Shit, I was watching Jake took over my FOMC stream last FOMC. I did not know you can bet on his first words. What were his first words? They were like, "Good day." Good morning. Fucking funny, man. It goes to show the extent of these like prediction markets, right? It's literally only the beginning. What color tie? That's crazy. There's probably a shit ton of insider trading here, right? With all these fucking prediction markets. This Rumo should be Fed chair. His signals are gassed. Gonna be able to bet on NFL players' socks color soon? That's fucking crazy. It's crazy because like I feel like if you thought like for example, like there's that whole controversy with like players giving up certain bets, right? Or having close family members or friends kind of bet on certain statistics that they were going to pull out on either NBA games, baseball games, UFC fights, right? Now imagine being able to bet on a fucking sock colors, something so controllable that is very hard to kind of prove that it's rigged, if that makes sense. I don't know if I'm making sense. We would instantly increase rates for the most massive sell signal ever. Is that a thing? Betting he touches the mic with his left hand? Kalshi. I've never used Kalshi, but I think this is the Kalshi. Let me see. Let me make an account. That's the most decent shit I've ever said, right? Let me make an account, chat. 1 second. Continue. All right, send code. Couchy code. Made that shit up. He touches the mic. No, I assume so, but I'm sure there's fucking bro, right? Use code RAKE for Kalshi. That's what we need. That's like next that's the goal. Wait, let me make sure I'm not streaming all this, because that would be bad. All right, almost all set up here. Whatever. Why are they making it so fucking long? Okay, fuck it, we're back. I was actually interested to see if there was any bets on FOMC day, but they keep asking me bullshit questions, so I'll set that up later. Make a bet on this. Let's go. That's what I was trying to do. D1 DGen. There are different ones. The one Mitch uses is actually $300. You do not, you don't need deep sharps for any of it though. Oh, for like order flow stuff? Doing well. I, however, have been learning Gamma for months, so it helps. What's up, Adam? Just scrolling up here on chat. Checking in from vacay, sunburn as hell. Where are you at, Adam? Where are you at, brother? You're now a gambling economic with prediction markets, bro. Absolutely. So FOMC announcement here in about 10 minutes, chat, or 13 minutes. You said no way. Usually here for rake, but what we thinking on FOMC? Glad to meet you, my guy Blizzard. Appreciate you for being here. For FOMC, I have no idea, honestly. I don't know what to expect. I'm here to just see if we could trade the reaction. What I'm hoping for is higher prices. If so, that would set up a lot of good setups for the upside, right? If we turn around and flip green and have a displacive FOMC to the upside, that's going to set up a lot of clean moves to the upside, in my opinion, going into the later end of this week and all of next week, right? But that's that's just my want and desire. Yeah, if you're making at least a K a month, I could see it being a solid investment. Oh, you're talking about that would get Lomeli a coffee delivery every day. Yeah, I'm all over the place here, chat. I'm going up and down, up and down. What's up, Praga? What's up? What's up, Preppy? What up, what up, what up? Appreciate you guys being here. Kalshi has Feds maintaining rates at 81 and hiking rates is at 21. What's up, Rafina? What's up, chat? What's up? So it seems like most of chat thinks we spiked lower. I actually think we spike higher. A little bit of are you a full-time? Yes, technically yes. And before trading, I did a lot, man. I worked in construction. Well, first off, I got into trading when I was in college, and I went to UC Merced. I dropped out my third year. I was making money but losing it. I genuinely didn't want to go through school, and yeah, after that I did a lot of construction jobs. I did flooring. I worked at stadiums. I did warehouse jobs. I did DoorDash. I did a shit ton of DoorDash. I did what else? I did sales for a bit. I did what else? I'm trying to think of all the other jobs I had, which are a shit ton. Yeah, but that's just a little gist of kind of what I did. Yeah, luckily I was for the construction job for the flooring. I'm considering that construction. I was working basically Friday, Saturday, and Mondays. I had a very flexible schedule. It paid amazing, and then I would go through seasons where I would have to go full time, right, with the construction job. So I talked about this before. We would do it was like different prison jobs, right? Like we did one in Soledad in California where we would go and stay there at a hotel and literally work from 8 to, what was it, 4-ish, 5-ish, but the pay was amazing, right? It was these prison jobs paid amazing. I think it was close to 100 an hour. And so yeah, it was a no-brainer, right? Being there for a month kind of gave me enough wiggle room. And yeah, they fucking pay amazing. And yeah, it was a interesting job because you're there with inmates, and the inmates work right themselves, and they have them kind of helping you. in a way. Not really helping you. They don't do shit, but they're just there just to say they were there to clock in, quote unquote. But yeah, interesting experience, honestly. But yeah, so seasons like that where we would do jobs like that, I would kind of be there for a month and kind of put a pause on tradings. And I did that for about a solid well, I did that kind of growing up. Yeah. But keep in mind, that wasn't every day, right? I mean, it wasn't like an ongoing thing. That was kind of like the better paying jobs. But yeah, as it is though, any sort of construction job pays amazing. Yeah, I remember. Yeah, I would love them because I kind of would go through them. I would get the call like, hey, we have this job here. Would you want to take it? I'd be like, sure, fuck yeah. Like, sign me up. And it would set me up for the coming months. And I would do it again. But I always had it in mind, which is why I always kind of loved DoorDashing, was because I knew that I just wanted to get by until this trading shit worked. Like, I wasn't interested in stacking from a job. I was more interested in making this shit work so I wouldn't have to do that. AGC, my guy, what's up, brother? Yeah, so which is why I really fucked with DoorDashing, honestly. And at the time, I was doing it in San Jose. Bro, the pay in San Jose was amazing. It was just getting started. It was like, I think, if I'm not mistaken, they started in San Jose, and yeah, the pay would be amazing. I would go to work, and then I would come home, and I would DoorDash for the rest of the day, and then just trade in the morning. So I was always trying to figure out, I guess, what I could do. Are you waiting until 3 p.m. at least? I don't know. I'm gonna wait and see the reaction, but we'll see what we get here. Again, if I were to anticipate, I think we spike higher, or we trade higher for the overall real move. But that's just my prediction. So 4 more minutes, chat. 4 minutes, and then we get the release, and then after that we get the we don't really get the real move until like 30 minutes after, for the most part. But Fish is already on it. Just finished swimming with the kids in the swimming pool. Fuck yeah. Where are you from, Praga? Is it hot out there where you're at? Now got some snacks and getting ready to trade. Fuck yeah. Already entered on the RT. What does that mean? On the retest or on the reg trades? Not our cold as fucking Belgium. Holy shit. Mitch said someone's gonna put a big downside bet on ahead of FOMC at 72.90. Holy shit, that's way down here. 72.90. It looks like which correlates to 73.25-ish on ES. Huh, interesting. Yeah, all I could really do here is just wait for price. Wait for price to settle, and then from there kind of see if there's any sort of opportunity. Again, I'm not a big fan of trading FOMC, but we're here. You know what this feels like, chat? When you first start trading and you're waiting for market open. Fucking we ball, man. Man, haven't said that shit in a minute. Fucking we ball. That's a good motto to have, in my opinion. Whether good or bad, you wanted to play the game, so fucking ball. Fucking ball, man. set a little FOMC gamble here. $20 seconds, chat. Again, have no real game plan here other than waiting for price to settle. Once it does, then I'll go ahead and what the fuck? What the fuck, chat? So we just took out that swing high. Let's see if we just spike high to trade back lower, but yeah, there we go. Well, hopefully we continue trading. I wouldn't pull it past you. Hopefully we continue trading higher. That would be amazing. That's essentially what I would want to see, but we'll see if it's like a spike up and then trade back lower for the session. But if we spike higher and then just continue higher, I would love that, especially for the daily bar, for the weekly bar, and yeah, so initially we get that spike, and once they come on and talk about whatever they talk about, if there's anything negative that is taken upon the market, then this whole move kind of gets erased. Sometimes what we get is a spike, and then they start speaking and they say something negative, and then we quickly erase the whole move, right? We get that sometimes, but if nothing negative, truly negative is being said, then the announcement literally just continues the original move, right? So we'll see. We'll see. 30 in about 28 minutes or so, we get the actual release, or not the actual release, but the actual announcement from what's his name? Whatever bro's name is, Howell Jr. Where's the video? I can't find it. What video? Warsh. Victoria, what's up, Victoria? I said Powell Jr. Lomeli, what's up? What's up? Prepare to short. I miss Powell. He had like a soothing voice. Am I tripping? There is, right? Was it Meta that announced earnings? So we have Meta, Microsoft, Robinhood, ARM, Qcom. We got Chipotle, you know. And then, oh shit, then tomorrow after close, we have Amazon, Apple. Here, I should probably show you guys. Tomorrow after close, we got Amazon, Apple, and that's about it. The bigger ones are Amazon, Apple, and Meta, Microsoft today. So big four that should, on top of course, the FOMC, should give us some sort of action. We just traded up into premium of the range. So we'll see if we reject or we continue. No pressure if you don't like what you see, my dog. Happy Wednesday. Appreciate you being here. My guy, appreciate you, Jake. Oh yeah, like I told Chad, I think today would be more than likely just eval day. But yeah, we're here and seeing what we get. I'm kind of waiting on the basically an hour in, so 11:30, to see if we get anything. But yeah, it's kind of just taking it kind of moment by moment here. But yeah, shout out Jake. The 4 hour did close very bullish. I'm very very bullish in the sense where we got a failure to go lower inside this kind of this 4 hour range, right? If we really wanted to go lower, we should have not gotten this close essentially, right? So it's I'm leaning more towards the upside here. Let me see. Jake, the awesome CEO. Logan Warsh is in 25 minutes. Yeah, I'm kind of waiting on him. I thought he talked that one. No, he talks in literally 24 or so minutes. Logan, now you're smart. You're a genius. I mean, we're still going up, right? That's what I would hope. That's what that's what I want to see from price. Especially if we can trade higher through this FOMC and then invert these gaps on the 4 hour. I think that starts the move to the upside. Which again, like I mentioned, I still love upside moves to 30,094 on the higher time frames. But again, clearly we're still delivering bearish. So there's the, I guess what I'm getting at is if this FOMC continues pushing us higher, it could be the start to us flipping. Will you stream more speech on stream? Should I? Yeah, if you guys want to, I could pop it up. Head and shoulders, coconut, ballistic missile pattern. Short. That's literally chat every day. Someone's like, oh, there's this, bro. You should short. Did anyone take this or no? Or does anyone trade like the... I doubt anyone would have edge trading the initial announcement. Yeah, put the stream online and have AI lip read and speak what I think he is saying. Lip read and speak what I think he is saying. What do you mean? What do you mean, Braga? Imagine if your dad is Kevin Morse. Let's see. Wait, he's speaking already, chat.
Most of the data that central bankers and other government officials...
Chat, tell me why I'm looking at the chat here. I'm looking at this chat. I'm like, what the fuck is happening? I thought this was my chat. They're literally side by side.
Looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need.
Turn it up.
Questions that might have been quite applicable a generation ago that are less applicable now. So even
How's
inside
that?
of official statistics,
that's a replay? Is it a replay?
Task force and our own best thinking had recommendations how those official statistics can be brought.
Oh, I see what you mean. The live is on the website.
Our time using new analytic methods.
Yeah, I was a little confused, right? FOMC.
Almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject
All right,
to
fuck
much.
this then. Chat, do we know where the announcement is here? Because I typically stream it on. It'll pop up on YouTube once they start streaming at. But that's typically how I find it. Never done it from. Oh, it's right here. Federal Reserve Live. Okay, it should be here then. So we'll pop in at 2:30 Eastern, so in about 20 or so minutes. But yeah, I got you guys. Now, music is probably a little too loud. There you go. Yeah, we have 20. It's on their YouTube official. It's on government. That's AI, bro. Fucking Brian. What's up, Brian? How you doing, my guy? You take anything today, Brian? What's your favorite prop at the moment? About to buy one. Lucid's pretty good. Lucid is amazing. I think they just came out with the I think the daily payout thing, right? Lucid's good. Ratify is good. Yeah, I know you love Apex, huh? Cash today, bro? Fuck yeah. Hell yeah. Let's see what happens after 2:30. Yeah, that's what I'm kind of waiting on here. See if we give up this move and then just trade dump lower, or do we continue pushing higher? Yeah, we're kind of getting this this V-shaped recovery here with NQ, right? We got a nice sharp sell-off, which has now kind of been recovering with the same speed that initially gave us the sell-off, right? So from a technical standpoint, I would want to see us trade higher, but if we invert this bearish 5-minute gap, lower prices could be, given it is premium of the range, right? So swing high to low, premium bearish 1 hour gap, 15-minute bearish gap, 5-minute swing high, and OTE of the range. But yeah, I would love to see higher prices though. Again, like I keep mentioning the last like week or so, week or 2 weeks actually now. These 30,094 level as a target is where I would love price to draw. We are in a monthly gap that we just tapped into. The monthly closes here on Friday. I think Friday's the 31st, so 2 days to see how we close. And then you have the weekly. We'll see if the weekly can close over last week's bar. We'll see if the daily, interesting action here because every single daily bar has been closing above the prior bar's low essentially, right? We're not really closing below the prior bar's low. You keep closing above it. That's pretty interesting. We got this kind of failure to go lower and inside of that 4 hour range. So we'll see if we if this is kind of like the pivot point for price to trade higher. As far as like the weekly profile goes, we opened up here, right? So we got the weekly open. So for the weekly, it's currently Wednesday. I don't really trade based off of this, but I do look at it from time to time. Where we are in the week, right? If the weekly opening print happened to be here, right? We trade lower into Tuesday and Wednesday. And then Wednesday, Thursday, we completely trade over the opening print. I would anticipate the weekly candle to have formed its lower wick, and then Thursday, Friday to kind of continue higher, right? So that's something that I'm kind of in the back of my mind kind of thinking about for tomorrow and Friday is, do we continue holding here or do we displace higher, especially after earnings, after market, and after this FOMC here having Walsh speak? Kind of things I'm thinking about here actively. Best to be out though. Who knows? Yeah, exactly. I gotten crushed one too many times trading FOMC or trying to trade FOMC. So this is actually probably like my first FOMC trading session in the last like 3 years probably. Fuck yeah, RX. Hell yeah, hell yeah. So yeah, just kind of waiting here the next 12 or so minutes, see what we get. So far, it's been pretty underwhelming. Pretty underwhelming action so far. We'll see what, again, I'm pretty stoked for my boy Walsh to come on. Yes, she usually pass it on to Jake, right? Refreshing to see you. My guy, appreciate you, Vish. Yeah, it's last session. I think I gave it to, or Jake asked to take over. So I think, honestly, if I'm not mistaken, I don't know what, I think I showed up for prior FOMC sessions, or am I tripping? But I don't remember trading them. You would have taken that NQ short if it wasn't for FOMC day. Premium of the range. In fact, I would have taken this long if it wasn't for FOMC day. That's why I was just laughing when. But it got me out this losing rut. But yeah, FOMC could be chaotic. But even then, taking the short out of premium of the range would have been kind of tough for me, just given the 4-hour closure. This 4-hour does not look like it wants to trade lower, per se. We did tap into a bearish 4-hour gap. Give you that. But I think had we gotten to that level a little bit different, that short would have been enticing, I guess. Started trading about a month ago and unprofitable still. Was there any moment when trading clicked for you? First and foremost, welcome, right? Welcome. It's going to be a long journey for you, as it is for all of us. Being a month in, I think you're at a stage where you probably know how to work a broker. You probably know how to work a trading view. You probably know how to work the buy and sell. You're learning market orders, limit orders, trend. You're learning all of these things, right? And which are good, which are needed. But I think the number one thing I would tell myself, if like I vividly remember when I started, and what I would tell myself is just show up every day for at the same time, right? First 2 hours of market open, New York market open, and take note of what worked, why it worked, and just show up, literally try to learn. I wouldn't really get stuck on trying to learn too many strategies. I would just say focus on bar by bar analysis, focus on trend, focus on levels, and try to show up every day with an open mind. You're an observer, you're not trying to make money. If you could do that for the first year, I think you'll be at a much better spot than you trying to make money, trying to learn it all, trying to do every single little thing to that's, I think what most traders do is they focus too much on the money. And I think that by doing so, it puts you at a disadvantage, because trading, it doesn't care what you want, right? Trading kind of, the main thing about trading is you have to understand how the markets work and why they do certain things, right? So the only way to do so, in my opinion, is by showing up every day and taking note of what worked and why it worked. And at the same time, if you want to put in more time, backtest, right? And yeah, as far as for me, a moment that clicked for me, I wouldn't say there was one specific moment. I think it was just a period of time of like, from time and time again, kind of going through the same cycles of, all right, this time is going to be different. This time I'm not going to blow my account. This time I'm going to do X, Y, and Z differently, right? From having those moments time and time again to being fed up with them, be like, all right, something needs to change for me to stop doing this, right? So I had like this moment of like, all right, I'm done with this shit. Like I'm nothing changes if nothing changes, right? And although I thought that I was changing certain things, external things, time just went by and nothing was changing. Can you do born slippy, please? I got you right now. Where was I at? Yeah, I was trying to find external things to kind of fix my trading instead of digging deep and figure out why I was doing those certain things, right? And for me, it was more so that my biggest issue was that I felt like doing less in trading was me being unproductive, when in reality it was what made me productive as a trader, right? Taking less trades, showing up in front of the screens for less. And it wasn't until it took years of self-analysis, self-reflection, and understanding that as a retail trader, as a retail trader, your edge is this. Your edge is that you can trade whenever you want, which can hurt most traders, right? But that's your edge. You can trade whenever you want, and you can trade. You don't have any pressure on on your shoulders saying you have to trade today. No, right? It's like these big prop firms, right? Like you have you're working for, say, S&B Capital. You kind of have to trade every day. You kind of have to look for setups that present themselves, right? They have a handful of edges that they work across different markets and different assets. You kind of have to trade, right? As a retail traders, if you want to take off a week, take a week off trading because you just don't like the markets, you don't like the weekly candle, you don't like the daily, you don't like the range, and you can do that. But as a retail trader at home, you feel like you're being unproductive. And I think the number one thing is social media. Social media, you see people crushing it on weeks that you take off or weeks that you're red. You see people crushing it and making a fucking bag. Like that analogy goes, right, with blackjack. It's like trading is like blackjack. You're putting in your chips after you see the hand that's being dealt, right? If you get a 13 against the dealer's 10, right, you might want to skip that setup. But if you get an 18 against the dealer's 3, you might want to put on risk, right? And for a whole week straight, if you keep getting, say you show up to get you did get dealt one hand, right? You get dealt one market condition for the day. If for a week straight, every day you get 7, 6, right? Or you get 13s, 14s against the dealers 8, 9, or 10, right? You might want to just maybe de-risk or skip that setup or that day, right? It's kind of how I look at trading. You have to stop lying to yourself. Instead of trying to be the best trader, you have to switch perspectives to try to be the best version of yourself. Yes, exactly, Brian. On the dot. The overall focus should shift from because I went through that whole stage of trying to do trust me, Chad, I went through every single morning routine. I woke up at 3 a.m. I would wake up at 4 a.m. I would wake up at 5 a.m. I would wake up and hop straight into the charts. I would wake up and have a whole workout. I would do hard shit in the morning, thinking that if I did hard shit, my trading would then be easy. But I would do all that shit. I would take cold showers. I would do everything in the middle of winter just to show up and take a trade at 6:31. How fucking stupid is that, right? But yeah, long story short, I went through the whole, I think that out of a lot of traders, I think I kind of experimented with a lot of mental things, right? And I came to realize that there's really nothing you can cheat out of hard work, right? You have to sit down and really look at price. Been there? Yeah, brother, I kid you not, man. Bro, it's fucking crazy. It's crazy how the mind works. In my head, I'm like, I just have to be more disciplined. But there was literally no way I could be more disciplined outside of trading. There was literally zero way. My diet was locked in. My working out was locked in. My sleep was, it could have been better. But everything else outside of my trading was locked in. But I was kind of ignoring trading. I was ignoring, okay, let's build a playbook. Let's build a a game plan. Let's build a game plan for the month. Let's review our trades for the day, for the week, for the month. I wasn't really doing any of that, right? And if you look at, there was a video I was watching the other day with S&B Capital. It was titled, I think, "Day in the Life of a." Fuck. Let me show you guys actually. But yeah, it goes to show how crazy, how like dialed this one. I spent the day with the world's best young traders. They literally wake up they're in Miami, right? They wake up at 6 a.m. Market over there opens at 9:30, right? So they wake up at 6 a.m. They go for a workout, 45-minute workout. They have calls with other traders talking about the best setups. They then get on the desk to have more calls talking about the best potential plays that are setting up for the day. Then they do their own analysis. Then they trade. They talk about their trades. They have joint accounts where they have joint accounts where they take the best setups across multiple traders. So if you're thinking you're gonna outperform traders like that by simply just showing up 30 minutes before market open and slapping on one trade and calling it a day and coming back tomorrow, you're gonna go through years of thinking you're making progress, but you're really not, because you're really not putting in work. What are you really doing with your free time, right? I would ask yourself. And yeah, every time I look at like these S&B Capital dudes, it gets me thinking on how much, like, who you're going up against, right? And you're going against people that are preparing for 3-4 hours before the market even opens. Right? Before the market even opens, you have traders preparing. To be honest, when some of you guys are going to sleep, like the level of preparation that these professional traders go through is the amount of sleep that most traders get, right? 3-4 hours. Like, think about it, bro. Fucking think about it. Wars is speaking. Let's see. Well, price is reacting. Let's see.
So capable and mission focused, and so
Is it live chat? It should be live, right?
To sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5 to 3.75.
Make sure the audio's fine.
The committee is continuing its policy of making ample reserves in the banking system.
All right, testing.
Make sure the audio's fine. Is showing impressive resilience. Policy of making even with recent shocks.
All right, testing. Make sure the audio's fine.
And reveal solid growth. Job gains have kept pace with the workforce.
Testing.
And the unemployment rate has changed little.
Testing.
Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake.
Let's see. I'm gonna go to
be right back. Inflation target was somehow
take
above
a big
2%.
ass leak. Hold on.
Let me reiterate. There is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks, or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy.
All right, I'm back. I'm back,
Two
chat.
economic developments are worth highlighting.
Stop filled.
The first is
Order
a very
filled.
notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest
So we
rates
retraced into that
between FOMC
15-minute gap.
meetings are among the most significant
15-minute order
in
block.
the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball,
It's a good day.
not the referee, and market prices will continue to respond
Worst
in the
feeling.
direction
It should be loud
and
enough, right?
they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center
Look,
of
he's
attention.
drinking out the same cup.
I understand the desire for rolling forecasts and commentary from this committee.
Bro is drinking
For
out
our
the same
part,
cup, right?
We need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal. And where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. The surge in
Fire.
high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important,
Chat, do you guys want to listen to this, or should I take
of
it
the
off?
big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting,
I'm kinda staying
vigorous
quiet here 'cause I'm
discussion
listening.
centered on 4 questions.
Listen,
which
got
I
you.
will enumerate.
Yeah, all right, cool. A little bit less
First,
talking. We
We
listen.
talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed?
Crazy. If he gives a signal, we're in.
Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed. We're asking the right questions. And in this consequential time, we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them now.
Let's start with Steve.
Thank you for taking our questions, Mr. Chairman. Sure. You've had a couple months now, or 9 weeks, or whatever number it is, to see the markets behave in the absence of.
Yeah, I was looking at it long
forward
after this
guidance.
1 minute
I'm
BPR
wondering if you
inversion,
could
but
tell me what message are
missed
you
it.
getting from the markets as to where policy ought to be right now?
Yeah, so I think officially it's 8 weeks and 4 days, but I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message, letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves, what does that mean about our remit? How are we doing?
yeah, I
on
think we
inflation?
visit
How are we doing on
28,060.
We're trying not to interfere with that market signal.
I think we
It's
hit
part of the reason why
28,060.
We've been somewhat spare in our words. Why we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, you know, many of you might be interested in our reaction function.
Yeah,
We're interested in
28,060 would be the
reaction from
target,
markets.
would be the draw for today.
I get that, Mr. Chairman, and I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would
The
suggest
markets are
that
talking you,
that's where
what
the
do you hear them
funds rate
saying?
ought to go.
Yeah, so
Sorry.
I'm sorry, it's your question. So interpreting markets is an imperfect business. We central bankers like market pros can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor market's solid, steady. The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly. But the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Chat, the two setups that I hesitate on FOMC tend to be the ones that fucking
You
pay.
seem to have got the family fight you were after at this meeting. We saw three
man.
dissents. Could you characterize the arguments that those dissenters put forward, please?
I'm feeling some
Tell us a little
famosita,
bit
as Jake
why
likes would say.
you weren't persuaded by them at this stage. Thank you.
So
Not
I
gonna
guess I
lie,
shouldn't give
kicking
you the
myself for
best
not taking
arguments.
this.
I'll give you some others.
Kicking
So
myself
you're
for
right.
show.
I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy.
Yeah, I wouldn't doubt it.
We didn't sort of hide from them. We weren't
Which is
scared of
literally what I
them.
want.
There was a lot more interaction.
literally
between
want
and
us to
among
squeeze
my
higher
colleagues. It was a real family
to set up
my view.
my
which
options
you've all
have,
heard,
what, about
is,
2.5-ish
it's another way to get
weeks
policy
out to
right.
expiration.
That's our North Star. So there
Um,
was a lot of agreement that
if we
I
squeeze,
heard.
I'm all for
We
it.
have the powers, the tools, also the authority to deliver stable prices. No walking
You're in
back
NVIDIA
from our
short?
responsibilities. There was a large majority support for the decision that we made.
NVIDIA
in the
short.
room. But I also want to leave you, Claire, with one other impression. There was nothing
Partial
inertial
NVIDIA
about
short.
this
Are you in a
discussion.
swing or what, Chris?
It was an active, robust
Added NVIDIA
discussion
short,
about
partial
what's in the
NVIDIA
full
short.
range of
Love
what
this
we
added.
can do and might want to do in the period ahead. You characterized accurately there was a disagreement.
Are you
about
in like a swing or
decision
what?
Today, I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remit. These days, that means delivering on price stability. I wouldn't measure that
Scalp to
path
the
in
mean.
42
Got you.
days or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the cool CPI print for June?
So in 2 words, not much, not much. I'd like to believe that the committee shares my views, which is the historical.
Is it me or Powell was a lot more
data
straightforward,
dependence
chat?
is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation.
He's showing a little bit more personality than Powell used to.
About his trends on the data.
Not gonna lie, chat. Bring Powell back.
Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching inflation data over the period ahead. But I also don't want you to leave the misimpression that we're sort of breathlessly waiting that. I've called for a task force to revisit both the private and public data we use to make our decision making. That task force is out.
Someone said, I mean, where could we re-enter for buys?
But
Literally on a pullback.
Overly relied on any one piece of data.
On some sort of pullback here. The draw. Oh, this is ES. The draw is London highs.
Thanks, Neil Irwin with Axios.
So maybe a pullback to New York opening print inside a 5-minute gap, maybe, perhaps.
Below the 2-year yield suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high. Why should rates not be higher today?
There's a lot in there, Neil. So rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those.
I fucking missed.
Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them.
You put it on Logan's advice?
Mischaracterization to say that markets
Watch this, just dump.
Reacted because we didn't.
No, honestly, a day like today, where we're kind of just getting that off of news.
Ahead, we've got important decisions to make about the policy.
I'm not advising for it, but if it works, it's going to work today.
Quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize in the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction or was that a hair trigger close call on holding versus tightening?
Yeah, if I was in this still,
I think, the vote.
I would just be waiting for London highs.
Not
if I was in this still. If I was in this in general, I'd be holding for London highs.
The course of the last days showed a lot of agreement on the hard questions.
We'll see if we get a pullback, but
about
how it's looking,
really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely. But my own judgment is
the weekly hat.
This is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
So we still have technically a whole nother hour to see if we get a pullback, which is interesting here for me.
The New York Times. You've mentioned that looking at the Fed's policy tools is one element of a 3-pronged strategy to address the inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
Did I zone out? Polar bear or what?
That was the discussion in the last 2 days. Is that the dominant remedy if inflation continues to be elevated through the forecast period? Interest rates could well be part of that solution. but I wouldn't say it's in isolation.
Oh, I know.
Tried to describe in my remarks today.
Would have been a nice way to come back, but
committees a couple of weeks ago.
this one
There was a
I'll
misimpression
let it pass right.
by
Given I
some
probably wouldn't have
financial
taken it.
markets, by some
I
households
would have
and
taken it had it not
businesses,
been
that central bankers like me,
literally
we
a
set
minute before
2%
FOMC,
inflation
but
target.
played out whatever.
Maybe we were
This
more
one, however, I
tolerable of a
I
somewhat
fumbled,
higher inflation
honestly.
target. In economics, we'd call that the revealed preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver.
Yeah,
the
it is
2%
more hindsight, I'd
target.
say.
That is the committee's definition of price stability.
But on a technical
one
standpoint,
way,
given the
absent
kind
the
of what I was
tools that you
explaining earlier, right, the
referenced,
V-shaped
to
recovering that
ensure
we were
that
getting,
get there is ensure that expectations
technically
are
from a
centered
technical
around the right
standpoint,
number.
I liked it.
And I think we made some progress on that.
Right,
I'm
the
not
first reaction off of
suggesting we're
FOMC was
done on
bullish.
that.
We were kind of
It's
still
worth
holding that bullish
reiterating.
action.
And
We
ultimately,
traded it to a
the
5-minute
business we're in
gap,
will be its
15-minute gap,
performance. We are going to be
15-minute
judged
order
on how
block.
we perform.
Um,
And that's what
and we
intend
got
to do. The
this
inflation
bearish
target,
BPR.
making clear expectations is one part of it.
Bearish
Making
BPR that
sure
went
we
invert.
demonstrate we're
Stop at the
responsible
lows,
for it,
targeting
not
the next
blaming
level,
is
which in
another.
this case was
And
London
our
highs,
policy
or is
tools,
London
like you
highs. We
referenced,
haven't
is
yet
the
tapped it,
third
but
and equally consequential.
How are you
technically,
factoring the fact that a large
amazing setup.
portion of the inflation overshoot
But,
is blamed
yeah,
as
like
by
you
supply
said, Logan, I
shocks, as
think
it's mentioned again in
had
the
this not
statement.
worked,
Does that blunt the
I would have been,
effectiveness of rate hikes in your view?
yeah, like FOMC, right? But
First, on the premise of your question, it was almost as if you were listening to our discussion in the last day and a half. A lot of our focus was on trying to
I do
understand
think so.
and
I think
identify
ES can hit
underlying
London highs for
inflation
sure
dynamics
with this
amid
sort of
shocks.
speed that we're getting.
We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter. But we're trying to understand is to what extent are these shocks broadening in their effects, broadening in their impact on prices that are quite far removed from it. Our goal is to have growth that is broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job and this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months we're going to refine that view and have a better judgment, and we're going to have market prices trying to help inform it too.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. I guess I want to drill down maybe a little bit. What specifically, in your mind, would be the argument then for
If we get a pullback here before London high gets taken, I'm
wouldn't
gonna take
characterize
this.
what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big hard questions, and I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause, they reacted to the inflation data in one direction.
Gonna go in.
Strong economic growth in
No
the other
sweep of
direction.
London, gonna go in.
and,
Well, if we don't
not
sweep
only
London
did
highs
the
and we get a
index went
pullback here into
Did the
the
Fed
daily
take
bars
an
open and
explicit
New York's
change
open
in
around
its
that range,
policy rate today?
we have some
But I
nice
think
speed
that's
and
the beginning of
displacement
the
that I'd
story,
be
not
willing
the
to
end.
take a stab.
And if I
But
could, I did want to ask.
if we
not
break
for
out of
bonds,
it,
but
then
looking
still the
forward.
same idea. I'm still
Traditionally,
bullish,
Federal Reserve
but
Chairman uses the Jackson Hole
but,
summit as a sort of a
levels
reset
would change, of
monetary
course.
Policy. Well, how do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. there is a tendency, especially with the proliferation of meetings and press conferences,
Kind of
to get
expecting
caught up
Monday
in
tomorrow to run back
myopia.
up to Monday's
Did you
high.
do this by a quarter or do that.
Listen, that's exactly what I want.
Ultimately, whether we deliver on price stability
Sundays,
matters some the
Mondays.
decisions we make in 6 or 7 or 8 week periods.
Yeah, overnight,
Matter
I think if
more,
we
what are
get
the big
if we
questions?
trail higher,
What's really happening with productivity? What's
it's
really
looking
happening
good for
with
tomorrow and
demographics?
Friday, and then of
What's
course
really
next week.
happening to the global economy amid the shocks?
It's exactly what I want.
Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional.
You're short
setup
here?
for all the action we're going to have between September and December. I will
All
tell you
out
one
the
other
best
thing that
long,
I am doing
best
between now and Jackson Hole,
best Lomeli,
to
long
check
bear,
in
and
with
everyone.
task
My guy,
forces.
appreciate you.
My first principle of establishing a task force is find the best
Optic
subject
short
matter
here.
experts anywhere in the
Sheesh.
world and put them
I
together.
don't know about that, man.
especially put 'em
You're
together
shorting
with
a big.
people who
You're
disagree
shorting
with
Fed
them.
news.
In the next couple weeks, I'm going to be doing a check back in. I've given them time to sort of think hard about their agenda, their debate, their schedule, and when they might be ready for
I'm
prime
just kidding.
time. I'll be doing a little bit of
Yeah, it's a little tough to
checking
try to
and,
short this.
That may or may not inform anything I have to say.
You were down 600, now you're up 1,500. Fuck yeah, Logan.
Nick Timmeros of the Wall Street Journal. Chairman Warsh, I want to follow up on Colby's question about
When are these gonna get
transmission.
fucking
You
volume?
said there's no cruel choice
Hey,
between stable prices
blue
and
balled
full
us.
employment. Rates bring inflation down by cooling demand. It's generally thought that can show up in the labor market. If that's not the channel you're relying on, what is?
Yeah, so let me go back to first principles, Nick. I don't believe that
This was the cleanest
either
action
part of our mandate
that we
is
could have
generally
gotten, and I
war with the other
fucking
part.
I
I
fumbled.
do not believe that price stability.
Literally,
and full
it doesn't get any
employment is
clearer
a
than this:
war
higher highs and
proposition.
higher lows. Potential
There
higher
have been
low into
policymakers, over the
clear
last
draws,
several
London highs.
generations who have thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. We're going to
Yeah,
have
no, I
price
agree with you,
stability and
Logan.
full employment.
Today was awesome
And
price
in
action.
fact, if you want to do the most harm to
It was
the
more so that I
labor
didn't want to trade,
markets,
and I'm not
you
trading
would
FOMC.
run
Like I
a
mentioned from the
period of
jump,
high inflation
if I
that's
did take
variable,
anything, it'd be
such
on
that
evals, which I have them
employers,
set up. But
businesses wouldn't really know what's going on.
yeah, it's
So I think the two parts of
unfortunate
our mandate are
looking at this
equally
price.
important. We have no legislative orphans here. I've been talking mostly about price stability.
Why'd you
because we're
fumble
doing
that,
pretty
man?
well collectively.
What can I
as a
say?
country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated, and that's what's taken most of our discussion. In terms of transmission mechanisms of monetary policy, I think different tools work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine-tuning business. We're trying to get supply and demand in broad order, but really what we're doing as we sit here today at this press conference is I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what productivity
Holy
is.
shit, gold.
And in some sense, there's a race between supply and demand. And the surge in business capex in and around AI, it's making that calculation a little harder to judge, but in the period ahead, we're going to be trying to judge just that.
And if I could ask, where exactly was the disagreement today? Was it about the inflation forecast, or was it something more around the risks, the tactics?
Yeah, so I'm going to I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and commitment. I didn't hear anybody walking away from it. The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the best move? What's the best strategy?
What's the
What's the best way to achieve
What does that mean?
it?
What does that mean, Chris?
And a second question that was asked is, when do we need to make
Best trade right
those
now is just to
harder
size down
calls?
along the
When do we
squeeze.
need
Best
to
is
make
just
those
wait.
decisions?
Yeah, I'm
And
waiting to see
like
the
I said
reaction
to one
off of
your
London highs here.
colleagues, I was comforted.
But
that
with this
the
speed and
markets
displacement,
in the
I
intermediate
again,
period weren't
prior day
reacting to
highs,
us,
prior
they
week
weren't reacting to
lows,
dots or to
Asian
speeches,
highs,
they appeared more
I
than
think
ever
they
to be reacting
they
to
get tested
real-time
today.
events. So they're gauging themselves how restrictive the Treasury curve should be, and that I think is
Next level here is Asia highs
development. We don't endorse
at
any particular market move.
28, 1.8,
but I
178.
also suggest we observe them with keen interest.
Janelle Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do? What are the risks that you see associated with that?
Yeah, so it's a
Got
good
this bearish
question.
VPR here after taking out
Surprise is
London
not the
highs.
objective function. Surprise is not what we're solving for. We have a clear North Star. What we're solving for is how to make the best decisions. Almost everything else should be in service to that goal. By not spoon-feeding markets, by not previewing our decisions, by not sort of giving nudges and leans, my colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets.
I think we see 988 first.
Instead of just repeating or echoing what we were saying back to us, they're giving us somewhat, not perfect, their own
I don't know. I
judgment.
think if we invert this bearish BPR, I think we see Asia highs with this sort of
Surprises
speed
are
that
not
we've been
the
getting.
objective, but at the same time,
We're still
I would
holding
say
1
we
minute
didn't come
action.
into this meeting feeling constrained by the full range of alternatives we had in front of us.
So some of your peers have continued to discuss how they think about policy decisions, and if you don't offer your reaction function or your way of thinking about it, how concerned are you that you're ceding control of the narrative?
So not very concerned. That's a short answer to the question. When some people that follow the Fed say, well, we don't want your forecast. We don't want your dot. We just want your reaction function. Part of me
Where's
hears
ES at here?
what
ES
we really
is
want is your
still
forecast. And what we really want is your dot. In terms of reaction
under
function,
London highs
let me
here.
sort of disabuse people of a question that may or may not be real and be out there. Any central banker, especially a central banker where the labor markets are more or less at equilibrium. Any central banker, when he or she sees underlying inflation moving higher.
Yeah, we're rejecting that
There's
bearish
more
BPR
inclined
here
to
at
tighten
London
policy.
highs.
Again, when you
So yeah, a
have the other
pullback
side of
into
your mandate,
some sort of
you
PD
see
array here would give
underlying
you
inflation falling.
I would look for a continuation type of
It's more
setup here.
inclined to loosen policy. That's my reaction function, and I don't suspect it will cause
You have
people
this
to not
hourly
continue
breaker.
to pry for more. Because the truth is, for a very long time in a lot of countries, coming out of the 2008 crisis, where in crisis mode, we were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance with clarity as if we're tying our own hands behind our back. Well, in crisis mode, that strikes me as a very prudent policy. But in more benign conditions, it strikes me as worth revisiting. But markets and market participants and reporters have learned to devour all that information, so I take seriously that the pullback of forward guidance requires some transition.
I'm going to take a stab here on some evals. Long into Asia highs.
Make better decisions, and in so doing, satisfy our remit.
Just trying to play off the momentum here.
Thank you. When you talk about the 2% inflation target, what measure
This
are
is
you
on
relying
DGen hours, chat.
So I'll give two answers. First, let me give the proper.
Which is a little bit
standard
overextended. I'm
answer.
aware of it, but again,
The,
it's just some evals.
The Federal Reserve every January outlines a statement of
Playing off
purposes
the
and
momentum here.
strategy. And in that strategy
Off of,
document, which I
London
believe was
highs.
dated January of this year, it describes a measure of PCE inflation as the objective function there. I have enough of my own, so that's our number. We're sticking with it. Who knows, come after next January, what we might say about strategy. I suspect the task forces might have something to add. But I'll say this, some version of the Lucas critique, some version of Goodhart's law in economics should remind us that when we talk about measures of inflation or something else, and we describe those measures as being consistent with our objectives, we might make them such that they're not very good measures or very good objectives. Broadly, if you said to me standing in front of you, I abide fully by the strategy document, we're going to deliver 2% inflation and not a whisper more. But to achieve that,
All right.
I'm looking at a broader set of
Took a stab here. It didn't really work. It was on some evals.
So without sort of fully
A little bit
reviewing my
overextended, I guess, but I was
cards,
betting on the continuation
I'm
off that
trying to
bearish
understand,
BPR
like
here.
my colleagues,
Bit
what's
short.
the underlying generalized change in prices that are happening in the economy? It is not a
I wouldn't
perfect
necessarily
science.
be looking for shorting this.
I might have said 42 days ago, I've got a task
Per
force
se.
for that. But we have a data
Again,
project
be
that's
looking for
trying
a
to look
pullback
and see whether
into-
we can't separate the noise
Let me
from
turn
the
this down
signal.
on my end.
And so if you would hear
I'd be
a
looking for a
message from me,
pullback
yes,
into
I
some sort of
care
PDA
about
rate,
what the PCE
kinda like
prints
we're getting
are. I
here.
care about what the contributions are from CPI and everything else. But my lens is broader than that, even though the remit is quite narrow.
Michael McKee from Bloomberg Radio and Television. I'm
Got a
struggling.
15-minute gap there that we're trading down into.
Today, and maybe you can help clarify this. You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market says you're not there yet because they've raised rates, but all you've talked about today is talking about it. And it's not like members of the committee weren't there before you talking about it. So I guess what the American people might be asking is, what are you waiting for?
Yeah. So, believe it or not, this press conference is not all I've done today. We have spent an inordinate amount of time in the last 2 days, 2 weeks.
Yeah, I'm going to step
looking
away for
at
the day. I missed
our
2 solid
monetary
setups. I'm not
policy
trading this. Have a good day.
Evaluating our
Yeah,
tools,
see you later, Polar Bear.
thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly not certainty.
So yeah, we're pulling back
the
into
decision
that,
we made today, discussion we had
I
in
guess
that
here on
room
ES, the inverts,
was the
we're
farthest
pulling
thing
out back to
from
that
the ship
breaker
I
here
could
on
imagine.
NQ.
As a
We're pulling back
at this
into the
very
daily
moment
open
in a choice between
on
two
the
alternatives.
daily
We
candle
heard
for
the
futures.
results of it, but I would tell you
15-minute
this
gap.
discussion was far more robust, and our thinking about how best
So
to
let's
achieve
see.
that target is advanced. And over the coming months, I expect it to be advanced much more significantly. If you were to if I were to steal a follow-up question, you won't be giving it up. If I were to steal a follow-up question, well, what's the world think about what you've done? I would again reiterate, what we do isn't just about what we say. It's not just about what we do. We're in the performance business. And so if I look at the Treasury curve, if I look at the dollar, if I look at a lot of things that are internals inside of financial markets, I think what they're broadly saying is that this committee does own it, has the credibility to deliver it, and they believe, like I do, that we will. But I don't want to leave you with a misimpression. We've got no magic wand. This isn't something that we're going to be able to carry out in days or weeks. But we're going to deliver on the responsibility that Congress gave us. And today's meeting and the preparation for today's meeting was an important step towards that destination.
Yeah, we'll see if we find some sort of support here at the daily open and the New York Open.
What vetting did you do?
If so, a continuation play here would be what I'd be looking for going into the
Given
close.
Mark Andreessen's substantial political spending, $25 million in just
Let's
the
go back to
past
some
year
music
to
here,
back
chat.
candidates who oppose.
Forever we wish.
We're looking very bearish. Think so? Might be a good long entry soon. Yeah, that's kind of what I'm waiting for. Honestly, that trade was a little bit premature, but I was kind of betting on the momentum to continue into Asia highs, which again, it was only on some evals, but yeah, it was a little bit premature, I'd say. Now that we're getting a pullback here, if we're able to hold around New York Open, I'd be interested in longs. Make a pull, start a pull shorter long. Let's see. Close. Huh. Close. Not letting me start a pull. Oh, you know what? I think it's because I have one open. Yeah, I have one open. And pull. Where did we go into close? Longs or shorts? The 1 minute and week look the same right now. What do you mean? The 1 minute and week look the same. Oh, I see what you mean. Yeah. Low key they do, right? Literally. So we traded into the hourly invert here. Hourly invert. We're in an hourly BPR. 15-minute gap near the New York Open. 5-minute gap at discount. Yeah, if we turn around, it should be from this area. Otherwise, I am staying cash. There's 2 minutes left on this 15-minute bar. Let's see how we close. Yo, the boy J King, what's up, brother? ES bounced at Jake's perfect level. Let's see. Regular. Literally, to the dot, to the tick. But also, we rejected these 2 levels here for Jake's, right? The next level here for Jake would be the 507, which would be over Asia highs and London highs. So let's see. Regular. So the 15-minute bar just closed here. If we invert this bearish 5-minute gap, I'd be interested in taking a long. At the same time, we'd be getting this 1-minute kind of change in state alongside of it. A little wider stop, but targeting the 177 or Asia highs. You're looking for a retouch of 860s for a long. Is that like a rejection block? Is that what you're kind of looking for? I've been seeing a lot of that trading online recently. Yeah, that sort of idea has been working today. Fuck yeah. Yeah, I don't know much about it other than people get like this type of trading. But yeah, let's see if we get any sort of entry to the upside. For me, essentially that 5-minute gap has to hold in order for me to consider a long. Otherwise, I'm calling it a day here. Now we have earnings after hours, right, as well? Which, again, they're Meta and Microsoft, so that should be interesting. We'll see how Meta and Microsoft perform, and maybe they push us higher. You're done for the day. Ciao, my guy. Appreciate you for being here, and I'll see you tomorrow, my guy.
Goes night. see the route into the sea. I close my eyes and see. I see.
Literally looking for this general area to hold. Otherwise, I'm not really looking to take anything. The area being that the hourly got an invert. We're retracing back into that invert, right? Invert fair value gap, which is this level here. The 15-minute is retracing back into a fair value gap / order block right now. 5-minute is currently delivering bearish, but if that entry was to present itself, it would essentially we'd be getting an invert, and yeah, it's looking like we're not getting that. So we're currently still trading lower. We pulled back into that bearish, that BPR that went invert on the 1 minute here. Got this very large, extensive gap here. Pulling back into that hourly fair value gap here on NQ. But yeah, more than likely not going to take anything here. That would probably be the swing low here, right? Yeah, that low hanging fruit was London highs. And now that we're kind of having this dump, I am not interested in longs here. Yeah, literally gave up all the since FOMC started, literally gave it all up. We're currently now at the 11 a.m. candle open. Literally. We tapped into that gap here on the hourly. Let's see if that pushes us higher. And we traded to discount of the range. Seven minutes left on this 15-minute bar. See if we can close above this gap. Yeah, we'll see what the reaction was off of that 700, or basically the 700 level is kind of what I'm gauging draw to be at now. Do we get displacement to the upside, or do we slowly trail lower? Did the fair, I don't even know. Let's pop it up. What are they currently talking about? Oh, it ended already. I don't think he said anything specific. I think Yeah, it ended. You said task force? Yeah, if these two 1 minute gaps get inverted, I wouldn't doubt if we see low of day again. Imagine we close that low of day. I wouldn't want that, honestly. I wouldn't want that, but shit, if we do, that'd be typical FOMC action, to be honest. Fuck yeah, RX. So you made 50 points to the upside, but made 400 points to the downside. 10 minis on my PA. Fuck yeah. Holy shit, 10 minis on your PA? Holy shit. Fire, fire. No, I think that's it for me, chat. I'm gonna call it a session here. Literally, nothing today. Tried it on an eve out here at the high. Look, expecting a continuation into London highs for about a 2-hour trade, or it was a little bit under 2 hour actually, but failed. And then we saw this dump back to the downside, didn't touch any of it. So that's it for me, chat. Wrong will be on in a couple of hours, and then yeah, we'll be on tomorrow, same time. So thank you guys for watching, and yeah, that's it for me. Deuces.